if I could get a comment from you on where you see the currency today, new record low on account of, again, the trade war that is escalating at this point in time versus the US dollar, the impact and the implications and how the finance ministry sees the rupee's movement from here on.
Well, I think, as I said there, this is a challenging time. And obviously, when you have a challenging time, when the markets are reacting over what might happen, I think the markets are looking at the risks to global trade and global growth. Obviously, to some extent, they will go for safe haven, like the capital will moves pretty quickly between countries now. And so therefore, typically the people will look at safe haven and go to US, and some of the flows will actually move in. That's also happened in our stock markets, where FPIs have really parked themselves back there and anticipating what might happen. This also happens when the Fed actions are anticipated. Like, if you recall,
yes,
there were also similar situations post-Ukraine crisis. There was also global inflationary pressures where Fed Reserve and several central banks, including RBI, hiked the rates. That time also we had these situations where capital was moving back and forth, especially safe havens. So it moves away from emerging markets into safe havens, and therefore, there will be a certain pressure on the currency. But this is something which the Reserve Bank of India, which is responsible for exchange rate management, and our management is, rupee is on a free float. Rupee is on free float. So rupee is not really thing, but only we take care of, RBI takes care of macroeconomic stability and exchange rate stability to, stem any unwarranted volatility. But there are certain secular trends which are allowed to operate because that is how the system works.
No, fair enough, sir. I understand that the RBI will do what it needs to do or what it feels is appropriate as far as the currency market is concerned, and it is very clear that the RBI has decided not to intervene in the currency market at this point in time. But, from an import bill perspective, with the rupee now depreciating to almost 87.26, that was the last rate that I saw before I left the studio, the impact on the import bill specifically, sir?
There are a couple of, there are different moving parts into this. Now you have also, oil is one of our important, imports, and it is pretty inelastic. So if you have an elastic imports, they will actually adjust fairly easily. If you have inelastic imports like oil, we must have to import no matter what, at whatever price. Now there also, while, we have an exchange rate issue right now, that means rupee has depreciated. We have also a fairly good, prognosis, for the dollar rate for oil.
Okay.
Because oil is the way the US will produce more oil, and the way indications are that the oil prices will not really move up. So to that extent, at least the dollar price, we don't anticipate very high, upside. The second thing is that, you also have an impact on imports, exports. In exports also, to the extent of imported inputs, obviously the cost rises.
Yeah.
But some of those duties are actually given back because exports are exempt from duties. So therefore, there is a drawback where, if the duty paid are, extra duties are paid, and then they are also refunded drawback. Then the ROTTAP and ROSTL, those are the duties which are not linked to the import duties, but the other duties. Those schemes also do remain. And exports actually also, into the extent of value added in the country, they gain the competitiveness.
Right.
It is like actually government giving them money in terms of if the exchange rate depreciation does take place. So therefore, exports get more competitive. So I think overall, we have to really see there are many moving parts into it.
I understand. So let me put it simply, sir, before I bring our guests into the conversation as well as Mr. Chawla, that would the depreciating rupee be one of the top concerns for you today?
I think it's a concern in terms of more in terms of, what's going to happen for the global trade and global growth. In the medium term, in the short term, that's more important. because that is how, many of our trading takes place.
Yeah.
And India is a fairly open economy, so it's not really a closed economy of yonder years. It's really a very open economy. Imports and exports as a percentage of GDP is pretty high.
Right.
So therefore, we are impacted by global developments, and we are watching the situation.
We are watching the situation. Mr. Chawla, let me come to